All right, everybody. Stocks by the numbers. Welcome back. And I just wanted to wait until market close to see if this company was going to hold this bottom trend line. And I just wanted to do a quick update here on STEM Incorporated, ticker symbol STEM, listed here on the New York Stock Exchange. Stock closed $1.23, down 6 cents, a little over 4.5% here on the day, up 1 cent after hours right now. And we can see this orange line coming down across is the bottom kind of all-time support level. And you can see that after last quarter, unfortunately, obviously the EPS came in with a big miss, which we kind of knew was coming. And unfortunately, the revenue really missed by a big chunk as well. And that's why we saw a big drop down. Now, we had the big run up here on the 22nd, and then you can see multiple, it tried to reclaim, it had multiple rejections coming off of this support trend line. They beat it all the way down. As you see, it actually touched new lows just sub $1 and then has kind of been on the up and up lately, rebounded back to above $1.50 and now is pulled back. But we can see again, we closed right above this support trend line. So we have to see now Monday if we're going to break and potentially come back down to the low ones, or if we're going to have a bounce here and we're going to try to reclaim, the 140s, the 150s, maybe try to get to that next level. We do have earnings coming up sometime soon, I believe. Yep. Earnings coming up in about the next 2 weeks. You can see EPS estimates a loss of 21.6 cents a share on revenue of about 63 million. So I said, in my opinion, based on kind of, well, as we see, it's this big long-term down direction, basically. So that's why I said, in my opinion, it's hard to time, and sometimes it's hard to call because really I was given the company the benefit of the doubt. We did multiple updates over the last several months. You guys know this, and they kept mentioning the increase in backlog, and I was just kind of giving the company the benefit of the doubt, and I kind of thought last quarter they would at least kind of meet that number and then maybe kind of like stable out, hold like the 170s or something. And unfortunately, they came out with another big miss, and again, the stock dropped down. We can see this fib here. This is the 1 year chart, by the way. We can see the 0.68 fib sitting here at about 95 cents. So in my opinion, unfortunately, if these numbers do come in light, I think Wall Street may beat it up and may take it back down to, 98, 95 cents, and we may break that sub $1. And that's why, because it's been beaten up so much, that's why I said last time when we did an update, I said, in my opinion, probably over the next 1 to 2 quarters is probably going to be make or break right now for STEM Inc. Because unfortunately, if we have another disappointing quarter, again, it's going to bring it down to sub $1, and then you may potentially run into a reverse stock split, which usually 9 times out of 10 doesn't end up working out well for the company. But I know what everyone's thinking, right? Oh, you may own it at $3, $4 a share, and if they miss again, you might sell it 95 cents, and then it like flattens out, and then next quarter it beats, and all of a sudden, they're back on track, and it starts raging, and everyone's like, oh my God, I can't believe I sold it for a loss. I should have held it. So, I mean, we know that's tale as old as time. Everyone's basically been down that road, but unfortunately, it's really up to the company here. And, you would think roughly 60 million, 63 million for a quarter really shouldn't be an issue, especially with the size of their backlog. But right now we have a market cap of a touch below 200 million, which in my opinion is actually kind of right near fair value. We can run some fundamentals real quick. But in my opinion, yeah, unfortunately, like I said, I just don't want to hear people consistently seeing, more red in their accounts. And then, of course, if you happen to have a couple of thousand shares, then they do a reverse stock split. All of a sudden, you have like 100 shares, and, it seems like an even worse position. So, unfortunately, it's really hard to call because a lot of the companies we look at, even if they're not consistent, they at least have kind of like mixed earnings, right? You'll see one beat, maybe one or two misses, then they come back and they beat, so they kind of like bounce up and down inside of a range. This stock has just been on the down and down. And reason being, again, is because it didn't show, well, it hasn't shown anyone any serious growth or any serious urgency yet, right? So hypothetically, right, let me lay this out for you. Imagine it stays flat. Then the earnings come out in 2 weeks. Let's say the company comes out, they brought in 70 million in revenue. What's going to happen? Well, all of a sudden it's going to shoot up, right? And of course, I know you're saying, well, that's obvious. But I mean, we've seen companies beat earnings and then they go down, right? Depending on guidance or who might have, left the company. So now the stock takes a hit, even though the company just beat earnings technically. So we know that anything can happen. But, we've seen other companies like ASTS. Again, they reported earnings. Technically they missed on revenue, but what happened? They came out with the catalyst. Oh, AT&T extended the contract. 2 weeks later, boom, Verizon comes in, makes an investment. So, of course, we never know exactly what they're going to say from quarter to quarter, but, for all we know, they can come out, they can meet or slightly beat this revenue potentially, and then all of a sudden they're like, oh, yeah, we got a contract with these people, we got an order from this company, and then all of a sudden everyone's going to be like, oh, STEM's back in play. They bottomed out. Now it's on the up and up. So, obviously, I'm wishing everyone the best. Full disclosure, I have a very, very tiny, tiny amount of STEM shares. Definitely not enough, not worth writing home about. But if we look at the financials real quick here, we can see, first of all, if we go back to last year, we can see 461.5 million, cost them about 140 to bring it in, right? So that would put really fair value of revenue, in my opinion, at about 320 million. So now if we come back over here and we look at the equity, again, total assets minus total liabilities yields total equity. We're at 320. And if we add that to the equity, we'd be at about 690, about 690 million. And now we come over here and we can see that if we add the cash onto that, you're looking at about 800 million. And then you can see the debt is a touch below 600 million. So if we subtract the debt from that positive value, you're looking at about 200 million. And you can see that is where the market cap is right now. And after we, that's at about the $1.20, $1.25 level. And you can see that we had multiple bounces off of that 120 level, drops down, tries to reclaim it and reject it, and then immediately bounced back and got back above that level and then started gaining even more momentum. So in my opinion, that technically does seem to be fair value at the moment. Of course, a lot of these fundamentals change from quarter to quarter. So if we hear now that, debt went up, cash went down, revenue is flat or it missed, then obviously that's going to change up the entire equation, so to speak, and we're going to have to reevaluate, and it's probably going to come in lower than roughly that 200 million mark. But, again, right now, I mean, technically it is a dice roll because we're looking at a company that's been in a downtrend for several years and, of course, is basically consistently missing on revenue. And a lot of shareholders are getting upset because they felt, I was misled. You keep telling me this phenomenal story about a growing business, increasing demand. You got a $2 billion backlog, but you're not making any money quarter over quarter. So this is why I'm saying I can appreciate the fact that a lot of shareholders are getting upset. They're getting frustrated. They're getting impatient. And that's why I think, in my opinion, this may be the make or break quarter. I mean, you may have, another 3 months after that as well, potentially the roughly November quarter, where it could be the bottom of the bottom. Maybe they don't have to enact a reverse stock split during this time frame. And perhaps if they miss here, maybe they'll beat next quarter and then they'll start climbing, rebounding on the up and up, right? So unfortunately, we just don't know. Again, my position, literally a handful of shares. So even if the stock shoots up to like $5, I mean, that's literally going to do nothing for me personally. So, I mean, even though I'm involved, technically I'm down, obviously. And that's probably how I personally would play it. Again, this is not financial advice. Whatever you do with this information is entirely your own prerogative. But in my opinion, if they happen to come in with another quarter like this and we're expecting 63 and they post like 40 or something, silly like that, then in my opinion, it might be worth just cutting it and, just taking that loss and potentially just rolling it into some other companies we looked at. We looked at a lot of companies on this channel that have some decent fundamentals, and they're companies really in all price ranges, if you think about it. There are a lot of stocks out there. There are a lot of other companies that are only a couple of dollars a share. I know we just looked at Honest. Honest was at what, like 280, and it ran up to like $4. I know that was short term, but of course, even in the, long term picture, that was a stock, $3, $4 a share. Even something like SB that was slowly climbing over time, that's sitting here sub six. Rolls Royce again was another big winner for us on that channel, on this channel. Same thing, right? Stocks like $5, $6 a share. So there are other options out there. SoundHound, right? And of course, we know that in the short term, these stocks can be very volatile. But the difference between all of those companies when compared with STEM is we're actually seeing them, growing the business more times than not. They're coming in above analyst expectations when earnings are due. So, they have much, much more solid track record than STEM. That's why I'm saying inside of the next quarter, potentially two, if we don't see this turnaround story in the numbers and we see that they have potentially truly bottomed out and now we're going to start climbing, if we don't have that conviction, then we might have to potentially move on to bigger and better things. And again, it's very unfortunate that the company wasn't able to, beat estimates here back in May because they really were getting beaten up. It seemed like almost like a guarantee short for a lot of people on Wall Street because the stock was just down and down. And if they happened to beat earnings here, the stock would have, catapulted back up to 2, and then shorts would have covered. And then everyone said, oh, they actually beat earnings. They're back in play. Okay, I'm going to buy some STEM. And you know what I mean? We might have started climbing up from trend line to trend line and started retracing back to $2, $2.50, $3 a share. So unfortunately, we are behind schedule, and that's why I'm saying, I think, in my opinion, if it really doesn't happen here, this quarter, and potentially next, that might be all she wrote. We have seen growth after reverse stock splits. Again, I remind you that Fubo went through a reverse stock split, got completely beaten up down to like $1. That's basically around the time I started the channel and I started looking at Fubo. And in my opinion, in the numbers, it looked undervalued. And then all of a sudden, they turned around the profitability side. The revenue started coming in above estimates. All of a sudden, the stock starts climbing, right? $1.50, $1.80, $2.20, $3. And then before you know it, you're saying, holy crap, this thing was at $1, now it's at $3. Did I miss it? So, unfortunately, that's why, again, we all don't want to miss the parade, right? But sometimes, what we want to happen and what we think should happen doesn't always materialize and become reality, right? So, unfortunately, like we say, we have to take what the market gives us. And if the market is still giving us, a company that's struggling and still needs another 6 months, 1 year before they bottom out, turn around, might have to reverse stock split, then it might be more advantageous to look for bigger and better things. But here on stock charts, we can see RSI touch below 50 now. On the daily, we ran up basically right back to that 70 benchmark. Then we started pulling back a little bit. Just closed right below the 50-day moving average of 1.25. Stock closed 123. However, technically did bounce off of that mid-Bollinger Band, it looks like. But still technically closed below the moving average. And you can see the MACD was climbing, and now we're curling back to the downside with these last couple of days. So we might even meet up and then maybe bounce again and start running because, again, we do have earnings coming up. And more times than not, you see a little bit of a bump. You see a little momentum come into a stock with earnings on deck. So we may potentially get back to like that 150, 160 range going into earnings. But I think, in my opinion, if they miss again, I think we go back to sub $1. I think they really beat it up. And we can see on the weekly here, RSI about 36.5. So we climbed up to about 40 on the longer time frame here off of this pump. And we didn't really, start to accelerate towards even the middle of the road here, let alone the 70 benchmark. So that's why I'm saying maybe over the next week or two going into earnings, we might see some volume come in. You might have a little bit of a rally going into earnings. But again, in my opinion, if they miss and disappoint again, it may immediately give it all back and drop back to $1, sub $1. MACD on the weekly slightly started climbing. Still looks relatively flat for the most part, but you can see mid-Bollinger Band 150. Stock ran up to 152 and then paused and started to pull back a little bit. So only time will tell. But again, like I always say, only you can only keep a stock up so much. if they're also, missing on revenue and coming in below these expectations. So chances are, unfortunately, this might not be a situation where we might just go on a run and get back up to $3.50, $4 kind of on its own merits, in my opinion. We do know that, revenue is key, earnings are key, and if you're just consistently missing the mark, you're more than likely going to consistently drop down in value. So right now, it's really all up to the company. Don't have much news here. A couple of days ago, Susquehanna lowered their price target from 2.5 to 2. Still maintains positive rating. From here, that's what, like a 60% move, which of course would be nice. But again, it's really all up to the company and what they report here in about the next 2 weeks, and I guess we'll see what happens. But that's pretty much it. I just wanted to update and show you guys this bottom support trend line and show you that, we rejected, we broke down below it, and then we reclaimed it, but we closed basically right back at it. So now we have to see Monday, Tuesday, do we break down and retest, or do we bounce and potentially keep climbing, like I said, going into these earnings. But of course, as you know, I'm wishing everyone the best. So anyone who's been involved in this one or bought recently, I really hope the company knocks this quarter out of the park for you, and we'll see what happens. But that's pretty much it, and I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Enjoy your weekend.